Yo, it's Midas. Let's talk about why, if you can win at poker, you can win in the stock market. This is why being good at poker makes you a better investor. So, disclaimer, everything said in this video is only for educational purposes. Make sure to always do your own research. This is why you should listen to Midas while I beat the S&P 500 by 103x in less than a year. If you want the proof, you can check out all my calls and all my wins. The date of my calls, the tickers I called, where the call was posted, whether it was YouTube or TikTok, and my total gains, which is over 5,000%. Let's get to the video. So you'll be wondering, why is poker and investing slash trading related? Well, they both require calculating risk versus reward before making a move. Both are games of incomplete information. You never have all the data, all the cards. You rely on probabilities and observation. And emotional control is key in both poker and investing. If you tilt at the poker table, you are more likely to panic sell in the stock or crypto markets. I also wanted to highlight that poker and investing, whether it's investing in crypto, whether it's investing in stocks, the same markets, same principles apply. But patience and discipline separate the consistent winners from the amateurs. Money management, bankroll control in poker mirrors position sizing and portfolio management in investing. Both reward strategic thinking over luck. Consistent strategy beats one-off wins. It's the reason why I have a 98% pick rate in my stocks and why I believe in my thesis despite everyone, panicking at every single dip. I decide to trust my thesis, and so far it's been paying off. But the first concept you need to understand is the risk tolerance and understanding odds. So, poker example might be you might have a hand that could win 60% of the time. A conservative player might call, while a risk tolerant player might raise. So, the analogy of this in the stock market is that buying a speculative tech stock, if you know about my channel, you know that's a lot of my picks, with a 60% probability of strong growth versus a stable dividend stock, like maybe like Coca-Cola. Understanding your comfort with potential swings is crucial. Now, the real life example of this is that, well, I saw a friend double down on a hand he wasn't comfortable with and lost it all. In the stock market, making trades or investments outside your risk tolerance can cost you months or years of progress because this means that, let's say you buy into like Big Bear AI, it goes from $5 to $9 and it crashes to $3. If you had, a really low risk tolerance, we sold that right at $3. But in the following months, that Big Bear AI rebounded back to $7. Then it dropped to 5 because of bad earnings, and now it's at $8. So keep that in mind. Your risk tolerance matters a lot in your investments and is also crucial in the poker tables as well. Let's talk about when to go all in slash your high conviction bets. So the poker example is going all in when you have a near certain winning hand or a huge pot that's worth the risk. The stock analogy is buying a small cap, like a penny stock or crypto. You deeply research because the risk to reward is asymmetric. And if you know what my channel, I'm very bullish on these asymmetrics 10x bets over like buying the S&P or buying ETFs, which are a lot low performing. So the real life example is in 2020. Some early Tesla investors went all in after careful research and they basically bet all into this company. Those who did, you know, with conviction were rewarded. Blind bets, however, they just bought into Tesla because of, the memes or just Elon Musk, however, often fail because they sold way too early. It's like you could sold Tesla maybe for 100% return in, a couple of years, but now it's probably up like, 2000% in if you just held on to it because you believed in the company. The third concept is patience and waiting for the right opportunity. So the poker example is folding mediocre hands repeatedly, waiting for pocket aces or a strong position. Stock analogy is waiting for a stock to drop to a favorable entry point rather than chasing hype. In this channel, I like to always preach that if a stock goes up more than 20% in a day, just, wait for a pullback to enter into it. Don't just buy into a company because it runs up that fast. Consider the bet gone, and going in now, the gains are pretty minimal, but you're also leaving yourself to risk because many traders that or investors that see the 20%, you know, stock increase will usually sell their positions at the top because they want to, collect profits. So if you enter now, you're basically exit liquidity. The real life example to this is I once watched a friend bought, quantum stocks like Rigetti, D-Wave, etc. immediately on a hype back in like, uh, before Trump got elected in 2024, and it skyrocketed. But then it crashed because, Jensen Huang said that quantum stocks are, far away from actually being useful, 5 years down the road. And then the stocks basically dropped 100% in like 2 days. So they sold it because they panic sold. They didn't believe in the technology. However, if you held it like me, you're now probably up, a you know, couple 100% this year. But had he waited and studied what quantum technology is, he could have avoided losses or picked a better moment to sell. Because selling so early just because of what a CEO said, when 3 days later he said that he took back that comment saying that that was pretty insensitive, we would have had a better timing point and a lot better return than just panic selling. Number four is reading the table slash the market sentiment. So the poker example is noticing opponent betting aggressively when they usually fold signals a strong hand. So stock analogy is investor sentiment can indicate overbought or oversold markets, like RSI. Example, crypto FOMO or panic selling in bear markets. The real life example to this is during the 2021 crypto hype. Social media chatter showed extreme optimism, a classic signal that a pullback was coming. Those who and then those who read it more or less, avoided those major losses. Number five, the fifth principle is money management slash this bankroll control. In poker, limiting each bet to a small percentage of your total chips to survive those losing streaks. Not trying to rage call or whatever. With your stock analogy, position sizing, diversification, and stop losses prevent a single bad trade or investment from wiping out your portfolio. So example of this is well on Wall Street Bets, I once saw a trader invest 80% of his stock count in one biotech stock. It tanked, over 100% a day, and he had to start over because, it's options, right? If your stop loss or your target price does not get hit, well, you're pretty much screwed. Or, for example, going all in on Dogecoin and not selling it in 2021. There was this one guy on YouTube who went all in on Dogecoin. He had $1 million portfolio, never sold it because he thought it was going to go higher and basically lost it all. But proper risk allocation preserves capital for the next opportunity. Number six is emotional control and discipline. The poker example is avoiding tilt after losing a hand, which causes reckless decisions. The stock analogy is avoid panic selling during a dip or chasing a stock in a FOMO-driven rally. So during March 2020, the real life example of this is that the market crashed 30% in weeks because of COVID. Those who panic sold everything at the bottom. However, disciplined investors saw this as a huge buying opportunity and they just bought into that huge dip when COVID happened and sold it at the peak. They would have made billions or millions of dollars just by buying and selling, not even trading. Number seven is probability and expected value thinking. So the poker example is calculating pot odds to determine if a call is profitable long term. The stock analogy is evaluating risk to reward ratios. So imagine investing $1,000 with a 70% of gaining $500 and a 30% chance of losing $300 has a positive expected value, just basic stats. But the real life example is I treated each investment like a hand of poker. So even if 1 out of 5 trades lost or investments lost, the overall EV was positive, which grew my portfolio steadily. That's why I have this 98% pick rate because I am, you know, bullish on a particular sector of stocks, not just, one stock in that sector, because that's usually just like a wild horse. But when you're bullish in a whole sector, that means that if one company goes up, the rest of them should also follow. Number eight is adaptability and learning from mistakes. So in poker, changing your strategy when opponents adjust or bluff differently. The stock analogy is adapting to economic cycles, regulatory changes, hype, bull market slash bear markets, and sector rotations. So the real life example is I used to ignore these market corrections, thinking buy and hold always works. Learning to adapt, cutting lost losers early, rotating sectors transformed my results. So poker and investing, you might be thinking that it's all luck, it's all gambling. Poker and investing and trading aren't luck, they're about discipline, strategy, and human psychology. Know your odds, manage risk, and control your emotions, and wait for the right opportunities. That is how you 10x your wealth. That's how you consistently win, both at the table and in the markets. But you have any questions about this whole analogy with poker and stocks? Give me a comment below and I'll respond when I can, or any questions about stocks or crypto. I am also launching an exclusive Discord community, so if you want real-time stock and crypto calls, access to my full portfolio, become financially free, and join a community of hungry degens, join in my link in bio. If you want to take a look at all my stock and crypto picks, check it out in my link in bio. And if you enjoyed the video, subscribe and link for more. I appreciate the support of all you guys. That's all I got for today. Today's video was on poker and stocks. If you want more videos like this, give me a comment below and I'll catch you guys in the next video. Peace.